Hey everyone, welcome back. You've probably noticed it. The market's been quieter on the surface lately. But beneath that calm, the tectonic plates of crypto and macro are grinding hard. This week wasn't about hype or headlines, it was about the real power shifts shaping what comes next. So today, let's zoom out together. We're going global, 10 key stories all connected. Because crypto is no longer an isolated playground. It's the lab where finance, politics, and technology are starting to merge. Let's start with the obvious heavyweight. Crypto ETFs just broke a record, almost $6 billion in inflows. That's not small investors stacking sats, that's institutional money moving. The story isn't that Bitcoin rallied again, it's that the bridge between Wall Street and crypto is now carrying traffic, fast and heavy. These are pension funds, family offices, hedge managers all saying, if we can't beat the volatility, we'll package it. Now here is where it gets interesting. ETFs aren't just vehicles, they're filters. Money that flows in this way changes how crypto behaves. It's more regulated, slower to react, but much more durable. This isn't your 2017 retail rally. This is the beginning of Wall Street colonizing volatility. Next, Tether, the stablecoin giant. They just bought over 10% of Juventus Football Club. Now on paper, that's a strange move, a crypto company buying into an Italian sports dynasty. But look closer, this is about brand legitimacy. Sports are emotional, cultural. And in Europe, football is religion. Tether knows this. Owning part of Juventus means more than investment, it's presence. It's a way of saying, we're not just in the crypto markets, we're part of your daily identity. That's power. That's how you normalize something that regulators still side-eye. By embedding it in culture. And they're not stopping there, Tether plans to propose candidates for Juventus's board. That's governance influence, that's the long game. Next up, Intercontinental Exchange. That's the same parent company that owns the New York Stock Exchange. They're investing $2 billion in a Polymarket. If you don't know Polymarket, it's a prediction platform where people trade on future events. Elections, rate cuts, wars, even pop culture outcomes. Now imagine that being pulled into regulated finance. Wall Street wants to turn speculation itself into an asset class. That's not a small pivot, that's a philosophical one. Markets used to price risk after events happened. Prediction markets let them price risk before reality unfolds. That's what makes this huge. Crypto is a crystal ball, backed by the biggest exchange operator in the world. Meanwhile, across the Atlantic, European regulators are cracking down on tech misuse. Authorities found roughly 10,000 NVIDIA H100 units being used for crypto mining, not AI workloads as declared. That's over $500 million in gear redirected from AI development to unreported mining operations. This is two stories in one. First, it's a reminder that crypto's energy debate isn't over. Second, it shows how blurred the line between AI and crypto has become. When the same hardware drives both revolutions, regulation becomes messy. This case could set precedent for how authorities treat dual-use computing. Because whether it's training a model or mining a token, the power grid doesn't care what you call it. Now, something geopolitical. A token called A7A5, backed by the Russian ruble, is still circulating despite Western sanctions. It even sponsored a major crypto conference in Singapore last week. That's not just bold, that's calculated. What we're seeing is financial sanctions meeting decentralization head-on. And it's a warning to global regulators, crypto rails are harder to police than banks. A7A5 is a preview of the future, where money can move around restrictions, where state-backed tokens can live double lives, legal in one jurisdiction, outlawed in another. Back home, the SEC and FINRA are investigating over 200 firms for suspicious stock movements. The link, crypto-related treasury announcements. In other words, executives may have known crypto news was coming and traded accordingly. That's a dangerous precedent, because as more public companies start holding crypto on their balance sheets, information becomes market ammunition. If these probes turn up dirt, expect tighter disclosure rules and slower adoption by corporates. If it turns out clean, we may finally get clarity on how companies can hold and communicate crypto exposure without breaking securities law. Either way, this investigation matters more than any price chart this month. Europe wants control. Major banks ING, UniCredit, Santander, and others announced a joint venture to launch a euro-backed stablecoin. This isn't about chasing Tether or Circle. This is about sovereignty. For businesses, that's convenience. For geopolitics, that's leverage. It's the euro's answer to the dollar's global dominance, and a way to make sure Europe isn't left behind in the tokenized future. Expect this move to stir debate inside the ECB and across the G7. Let's talk markets. Citigroup just raised its year-end price target for Ether while trimming its Bitcoin projection. That's subtle but revealing. Institutions are diversifying within crypto itself. The message, Bitcoin may have the brand, but Ethereum has the activity. Fi tokenization staking yields, it's where the growth narratives live. This doesn't mean Bitcoin's doomed, it means the institutional pie is getting sliced differently. Down in Brazil, a crypto firm called OranjeBTC is about to start trading on the B3 exchange. That's huge, because it gives Brazilian investors regulated equity exposure to Bitcoin through local markets. This is how adoption spreads, not through speculation but accessibility. Emerging economies like Brazil, Turkey, and Indonesia are quietly leading the charge on retail-level integration. For them, crypto isn't a trend, it's a lifeline. And rounding out the weeks, Trumpline venture World Liberty Financial announced its crypto debit card. Pilot programs are set to roll out in the next few months. This card will let users spend their crypto directly without manual conversion. It's an ideological statement as much as a product. For the political right, this is a tool for financial autonomy. For regulators, it's another gray zone to navigate. Either way, it's another bridge between ideology and infrastructure. The bigger picture patterns behind the noise. If you step back from all 10 stories, a pattern emerges. Crypto is being absorbed, not eliminated. By regulation, by institutions, by culture, by politics, From Tether's boardroom influence to ICE's billion-dollar bets to the euro stablecoin's political undertone. Everything is converging toward normalization through control. That's not a bad thing, but it changes the game. Because every bridge that gets built between crypto and the traditional world also carries oversight, identity checks, reporting, and governance. Freedom gets infrastructure, and infrastructure gets rules. So when people ask, when's the next bull run? The answer might be, it's already here. It just looks different. Risks to watch. Number 1, over-institutionalization. If the system gets too centralized again, we lose what made crypto special. Number 2, regulatory drag. Investigations like the SEC's Treasury probe could slow corporate participation. Number 3, geopolitical divergence. Tokens like A7, A5 show that money can become a new battlefield. And number 4, economic fatigue. Inflation in Europe, political tension in the US. These macro tremors shape sentiment more than any tweet or chart ever could. Final flash. This week proves something simple. Crypto's growing up fast. From $6 billion inflows to billion-dollar bets from the old guard. The line between us and them is blurring. Regulators, corporations, and even governments are all learning the same lesson. You can't ignore the internet of money. You can only decide how tightly you want to hold it. So here's my take. We're moving into the phase where crypto stops being an outsider and starts becoming the backbone of how finance, identity, and politics intertwine. That's not the future anymore. That's the present. And if you're watching from the sidelines, you're not early or late. You're just unprepared. That's it for this week's extended quick take. I'm Max, thanks for listening. Like, share, and subscribe if you want to stay ahead of the noise. Because while the market sleeps, the system's being rewritten. And when it wakes up, everything will look different. Catch you in the next one.